Ryan.
Good afternoon, everybody. Thanks for tuning in to the Tom O'Brien Show just after 3 p.m. Eastern Time. And we got a couple different markets shaking right now. S&Ps, we make a record high, 7,000 in the futures for the first time ever, 7,006. Excuse me, we back off a bit. We're trading at 69.83 right now, off by 4 points in the S&Ps, but that's a record. Speaking of records, Dow. Record on the open, 49,876. Almost hit that 50,000 mark. But boy, since then, you're down by 500 points from the highs. We're off 350 points on the session. We got some divergence. What are they talking about? Housing stocks and defense stocks, right? And when I say housing, it can be housing. It can be institutional investors like Blackstone. Russell, negative by 5 points, 25.91. You got Bitcoin off by $1,400, 91,420. Crude in focus, 56.22. Had a great discussion with Teddy Kegstad on the morning program. And yeah, I mean, what does it say about crude when you cannot catch a bid with everything going on? Look at the pop you got on Monday. Okay, imagine we're digesting Venezuela news on Monday. And today you're ripping lower with more volume than you did on Monday. In a normal world, and I say normal, Monday would be the day, right? We invade Venezuela over the weekend. We overtake the biggest oil reserve in the world. All of the action that follows when futures open Sunday night into Monday. And with all of that in focus, today's the day that the volume's coming. And we're breaking the recent lows, 56.22. Crude off 91 pennies. You jump over to gold. Negative $30 right now for gold. 45.12 was the high yesterday. We're trading at 44.65. Silver's had some volatility. You talk about it, man. Silver up to 82.58. I think we're about 10 pennies away from all-time highs. Yeah, all-time highs on the futures, 82.67. You get within 10 pennies of there, and we sell off a bit. We're about $4.50 off those highs. We're off $3 on the session, off $3.73. And let's jump around to some of the stories. So Blackstone and housing shares. And as I was mentioning, you know, the details aren't there, obviously, right? The devil's always in the details. That's what's going to matter. You say to yourself, okay, is this good or bad? For housing owners, investors, housing stocks, is it good for just local real estate investors, right? I'm in the real estate business. My head goes there, as I know many of you out there listening as well. The home building index was off 2.3%. Okay, we'll go through some of the home building stocks, but Blackstone, man, you talk about a quick sell-off. Okay, you spiked down to 147. We've climbed a bit. You're still off by 5% right now. Okay, Blackstone, I believe about $120 billion company. What are we at? Yeah, $120 billion where we are right now. So you're down 5%. We were probably, what? How many shares outstanding? Almost $1,773 million. Down about 5. So yeah, you come into the day at like 127 billion, 7 billion wiped off on market cap for Blackstone. The home builders, you know, and in theory, if you take out investors, yeah, you know, it would make home ownership easier. There'd be less demand in the market. And it's just the most simple economics there is, right? If you eliminate one person from being a bidder, you eliminate their demand. There's less demand. Where does supply equals demand? Where they intersect on the curve, it's a lower price. You got less demand in the market. Now, what if it brings back in more people, right? Well, rates are still going to matter for that, okay? It doesn't just matter that institutional investors can't buy homes anymore. Are they going to be able to keep the homes they have? If they have to sell them, how is that price going to get figured out? When do they have to sell them by? And you still have to be able to afford the home on the current interest rate structure, which is why I think the battle, I've been talking about it, between the 2-year, the 10-year, the Fed. When the Fed cuts, if we don't get mortgage rate cuts, anything's on the table on the short term in terms of trying to get the 10-year down and which would translate to the 30-year mortgage. We jump over to Lennar. So KB off 3.4%. You jump over to Lennar off 2.25% right now. Excuse me, D.R. Horton off by 3.2% right now. And from there, you jump to the defense companies. So on the heels of flying into Venezuela, President Trump said he wouldn't allow defense companies to issue dividends or buybacks of their own shares until they invest more in production and research. In a social media post, and here's the kicker on this one, executive pay should be capped at $5 million until they build what he deemed new and modern production plants. And yeah, the whole business model of defense contractors, folks, in terms of the overrun, right, the backdrop, the way that the government pays for all those overages versus the normal business course of running a business where you're taking the risk, right? A business comes to you, they take the risk, they make the contract, versus the other side of where they come to the government with ideas, they pitch the government ideas, and then the government funds those ideas to come to fruition, which is basically how a lot of the defense contractors work. So that's the backdrop of what's going on here. And you better believe with the amount of money that they're getting paid, that there's terms that the government can set when they're paying them that money, what they can do with that money if they want to participate in government contracts, period. Where it gets complicated is that no executive is going to make more than $5 million until this very vague goal, right? Imagine yourself in that role. And so, as is always the case, as this is always the case, if it was this simple, right, you'd say to yourself, well, that's great, let's do it, right? What do you think the greatest leaders in the world are going to do when it comes to ever signing up to be a CEO of a defense contractor? That's the last place they go. These CEOs are making about $24 million a year. The average CEO in the S&P 500 making something like $17 million a year. Okay, they're not making $5 million a year. So why would you ever get the best and brightest out yet? That's the simplest argument that always gets. Otherwise, let's just cap bank stocks until everyone can afford a home. Let's just cap home builders. Let's just cap every CEO in the S&P 500 can't make it, right? What would happen then? They'd go somewhere else. That's the argument. I don't think you want to cap it at defense stocks. Now, that doesn't mean that the system can't change, but in this day and age with technology, hearing that number that somehow executives aren't going to make more than $5 million, these companies, folks, right? I was looking it up during the break. Raytheon. Let's go through a couple of them. There's your decline from Raytheon, down from 194 to 187. Raytheon, $251 billion company. You're not going to be making $4 or $5 million running a $251 billion company. We'll see how it plays out. Market's reacting. We got equities. S&P's off by 12. NASDAQ up by 50. We're coming back, folks. We'll take a look at some equities.